All right, we should be live. I've got Steve in the house. I'll bring him up here in a sec. Let me just make sure everything is live and make sure everything is working correctly here. But yeah, it seems we're good to go. So let me pull this up here. We're live, we're broadcasting, we've shared it out, we've tweeted, we've commented, we've done the whole thing. Let me check the mic volume. Yeah, looks like it's good. All right, cool. All right, guys, we're back like we said we would be, right? So happy Wednesday. Welcome back to another one of these live Bitcoin and crypto market analysis sessions here on Wolf Bitcoin, sponsored by Public. And you can check out Public at public.com/wolf. Go check them out, guys. Let's bring up the man, the myth, the legend himself, trader Steve. And let's see what he's up to. You there, dude? Steve might be gone. Steve might be gone. He walked away. I took too long. He walked away. He said, man, screw this guy and his show, you know. But now look, he'll be with us here in just a sec. Steve, I'm gonna drop you a comment here and you can just let me know when you're back. Let's see here, private chat. Let me know when you're back. Cool. So we'll wait on, I'm going to mute him out just in case, but we'll wait on Steve to come back here. But look, we're going to look at BTC. We were kind of hanging out on a space right before this, and we figured, hey, I'm jumping on a stream. Might as well invite the guy up, see if he wants to come pull up some charts with me, because we were already doing it. We were already dropping chart screenshots in the comments, and it is just a lot easier to do it here. He probably went to get water. Yeah, I was probably taking too long, and he said, you know what, I'm going to go get a drink or go to the restroom or something. But welcome back, guys. BTC still pumping, still moving. Let me pull up my chart here. It looks like Steve is back. Yeah, no, all good. All good, man. Yeah. We'll pull up the chart here. I'll let Steve get his stuff ready as well. But yeah, I mean, we were on the space. We were talking about equities against gold. We were looking at Bitcoin against some of this stuff, and I just figured, you know what? Let's just jump on a stream together, anyways, and let's see what we can see and spot. So, look, I shared this one out earlier today as a post. I had shared this one previously. When was it that I first shared this? Give me one sec here, guys, and I'll tell you. So April 22nd was when I first shared this idea, and I just updated this morning, but it's gone a little past where I was initially looking. I was kind of looking down at these highs here, and it went a little bit higher. It went a little bit past that, but still, we got this like super trend exhaustion that we got down here at the lows as well, and we got up here at 126K. When you get just a little pink dot on its own, I mean, I think that's a what does the indicator say it actually is? That is when you get that on its own, it's a range high. So that would signal a range high. The little blue one down here would signal a range low. And then the yellow star is the trend exhaustion. That's like an extreme. It's signaling an extreme. And that's on the Gentleman Suite, by the way. So I'm using the Gentleman Suite here. Devin Janaz's Ash's Gentleman Suite Premium, which you can find by visiting my page. It's on there, and you'll be able to go check that out. There's a free version of it, so you can go kind of tinker with it a little bit. I use it because it's number one, it's Ash, a good friend, someone I've been trading with and hanging out with on spaces and groups for, I don't know, over 2 years now, I think. And he's been generous. He's built a lot of my ideas and requests into it. So for like all the VWAP stuff he threw in there because I requested it. He added this PVSRA candle feature, which is why I initially wanted to pay attention to it. And I like to use that. It just helps me visualize volume. Like if I'm looking at any chart, we can come over here to the stablecoin chart, for example. You can quickly visualize like what is a high volume candle versus what are just like standard candles. That these are just, and this is all based on volume. Like this is just standard volume. And if you pull up like a buy sell volume, you can see there really wasn't any kind of impressive volume through here. And then over here, where you got these big colored candles, that's where you had volume spikes. Big green candle, big red candle. So to me, it just makes it easier on low time frames. Sometimes, like they help you spot stuff like this, like what you just got here on the 4-hour on stablecoin dominance. So nice colored candles here at the bottom. It also threw a bottom extreme signal on here, right in the golden pocket fib. Did it over here as well, and then look what happened after that. You had a big reversal to the upside. So I don't know. I like to use it. It's pretty much my go-to. I use the visible range volume, and then I use the gentleman suite. That's pretty much what I rely on. But yeah, we were just talking about this stuff though. I mean, I think Steve and I both are kind of hunting and building short exposure here. We don't know exactly where the top is in. Maybe it's already in. Maybe it's got one more sweep up. We were talking about the yearly open and why, when I'm looking at like stablecoin, if the more I zoom out, the more realistic a move to the yearly open kind of becomes to me. But again, I am very much aware of the fact that it's such an obvious level that it could get front run. It's either going to get front run or it's going to get gone through a little bit. It's going to exceed it by a little bit. So but this is a clean level, this big gray zone here on stablecoin dominance. I've really talked about this over the last like week or so, right? Big support. Basically, it was like your 2023 support, and then during the bull market years, it was essentially your resistance. It was your ceiling. We're now back above it. It makes sense that this provides some level of support, even if it's just in the short term, and then it eventually comes back lower. But it does make sense that this builds some kind of a base here for a little bit, and then ultimately, if this base is out, some point it can break down under and then become ceiling again, right? That's fair to say. So when I'm looking at this though, and I'm seeing that much space to the downside, that's what, like Steve, when we were talking, that's what's got me wondering if this is going to try and maybe reach up here somewhere near, like you've got this area here for sure. Hold on here. Why is it doing it like that? Boom. You've got this area here where you've got some inefficiency in the market here. You had a big single print move, right? Like, could it come up somewhere up here just shy of the yearly open or near the yearly open? But as far as like EMAs and stuff, we're pretty much where we need to be. We're above the 800 and the 200. I think we're actually rejecting off of them here. Let me hide all this. And then the other reason I shared this, guys, is you don't typically see market bottoms that stick form with this kind of rounded bottom where you've got like ascending lows, right, that are increasing. Why? Because this you leave too much liquidity down here stacked to the downside. Now, some people were basically saying, well, you have done that before. You did it over here, right? They were saying you did it over here. And it's like, sure, you did it over here after you had wrecked everyone not doing it, right? So initially, they initially you were just slamming these guys. Everyone who was trying to get long in this entire thing, they got wrecked. They got wrecked. You capitulated all of them. That's what led to this. You don't really see it where you just form a bottom and then everyone gets rich because everyone's just longing all of these lows so easily. There's not a single example. Same here, right? You were boom, wiping out longs, wiping out longs, wiping out longs. Yes, eventually some highs stuck over there, right? Sure. But after you had cleaned up, and you see that everywhere. Same thing over here, boom, and then they stuck, right? Same thing down here, right? Boom, 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 messing up all the longs. Eventually they stick. But so I don't know. I'm a little sus. I don't like this. To me, when I see this kind of setup here, to me, this just usually means there's still another move lower to take out at least some of this liquidity, if not all of it, right? Like at least, let's say the low is in. I still think a move here makes sense, at least here, right? Back into like volume, maybe even to take some of this down here, maybe even some of that, even if that were to stick. But I don't see a situation where all of this just stays and never gets challenged. So, um, so yeah, that's kind of my basis for this. And then the similarity is also right. You had previous range low, you came up into previous range low, and then that's where you rolled. Same thing here. We've got previous range low. We've come up into it. We've exceeded it by a little bit. So it's just an area where I have to pay attention. I have to be paying attention. And then we did talk quite a bit about. Let me put this one up, and then Steve, I want to get you in here, but let me go back to the daily. So the other thing we talked about is that like on a daily or a weekly chart, um, this has been a huge area where you don't really have a lot of a lot of time spent in this zone. This is the first time actually that Bitcoin is kind of chopped through this. Every other time it's rejected from it, and then when it gets through it, it essentially needs to boogie through it. It needs to get through it quickly, and you can see it goes pretty vertical through it, both to the upside and to the downside. When it came back down through it, it came down very quickly. It didn't spend a lot of time. Every other time, it kind of rejected from it, right? It acted like some kind of wall. Boom, boom, boom. It was just banging into it. Couldn't really get through it. You saw that even here when it was coming down into it off the top side, right? Bounce, bounce, bounce until it finally had the momentum to get through. So this to me seemed a little bit out of character. Even when I first shared it, it's like, wow, I really don't see a situation where Bitcoin just kind of crawls up through here and then that sticks. Usually this kind of price action here, like Ash is someone that I've talked to with like about this many, many times, but this is, to me, this seems very corrective, seems very, very corrective, choppy, overlapping type of price action. So I'm still cautious because of that. But yeah, that's basically my thesis of like why I'm still a little sus here. And I'm not, even though I'm not trying to I haven't been trying to short this the whole way up. I did initially take a couple here. And once I saw that it was too strong, I've just kind of stayed out of it. I started again this morning to build a little bit here, but I'm still cautious because this still does look strong. And I'm not yet thoroughly convinced that it's going to stick anyway. So I'm kind of waiting for more information from the chart. Steve, what are you thinking, man? Like where's your head at when you're looking at this?
Yeah, I can pretty much echo pretty much everything you said.
Wait. We guys,
Yeah, let's go, Bits. Let's hear it.
a wild
Oh, no
a
way.
wild landy has
No.
appeared on the map. There's a wild landy.
The puppet.
Hey guys.
The puppet is here.
What's up, dude?
Hey, I was watching some brilliant charting going on here, so I figured, man, I might as well jump in here too so I can learn something.
Dude, let's level
Because
this up, man. We got the puppet in the house.
yeah, let me go ahead and repost this out there. Give me a second here. I just sat
cool, man.
down.
Yeah, Steve, give us your take while Landy's reposting and while I am updating the title here to see if I can tag Landy in it as well.
Yeah, no worries. And we gotta get Landy on the charts.
Yeah, dude.
Yeah, dude, I could pretty much echo the same thing as you. And obviously, as traders, I, Landy, all of us, we all know, we're just trying to get edge on the market and see where the most probable direction is, right? So I'm honestly just gonna stick with USDT dominance, and the reason I'm gonna stick with that is a lot of people like seeing green, obviously, rather to red. So I'm just gonna stick to this chart to say like what's bullish about USDT dominance. And if you know a bullish USDT dominance, bullish stablecoin rotation is bearish on Bitcoin and everything, right? So I'll just stick to this because people like seeing green. So let's see green here on this. So why am I bullish on stables? I'm gonna pretty much make it plain and simple, and I'm gonna stick to the weekly chart on why. What do we have on stables, right? Had a nice consolidation around here, came in, retested all the lows, nice support coming in, and we had a nice little breakout, which broke above our weekly 25 coming in, retest, and this is your confirmation that we're in a bullish trend, right? Us coming in from here, getting a retest of the weekly 20, weekly 25 coming in, and we have our second retest, right? So the reason I'm kind of echoing you bits and why I'm a little iffy on this whole uptrend that we're getting and why I could kind of see this bottom not being structured as a high time frame, possible, very possible, but I'd rather not believe so. That's what I'm not betting on. And the reason I'm betting on stables to start rotating and maybe taking out Bitcoin's new lows is we're in a very similar pattern to what Bitcoin experienced on stables to what Bitcoin experienced in the bull flag at 52K, right? So we have our bearish structure coming in, comes in. We have nearly retesting of all-time high, but what do we have to the upside? Nice wick to the upside, single wick, single wick. There's only 3 different times the price action retested all-time highs, or pretty much near it. Only 3 single candles on the weekly chart. Not much movement coming into these highs. So you could tell that there's a lot of liquidity above in this range. Tons of liquidity. So that being said, it's giving me some confidence that we could see more price action in these all-time high ranges. And where are we sitting right now? Pretty much at support on the uptrend of the breakout that we had since the 125K top. If I'm going into Bitcoin, that same thesis. Why was I bullish at 74K? Right? Weekly 50. What do we have? Why was I bullish at 52K? Pretty plain and simple. Price comes in, you have your bearish structure, breaks above, you have your whole bullish structure, test the weekly 50, test the weekly 50, buy the weekly 50 every time it gets tested, and you look for upside. So what does Bitcoin do here? Retest the all-time high, makes a bull flag, you have lows getting swept, retest the weekly 50 and starts zooming up higher. Comes in, retest of new all-time high, starts coming up higher. So USDT dominance is that same case scenario. So like you said, Bits, usually bottoms are not formed on a simple uptrend like this, to where you have all these lows just being consecutively profiting on an upside, where shorts are just getting stopped and stopped and stopped, but longs are just getting profit the whole way up.
Yeah.
It's very rare time you see something like that. So let's do in that same case scenario of what happened at 74K, right? Yeah, like you said, low stop, all long stopped. And what do you have to the whole downside structure? Shorts laughing, shorts making money, all they're getting is downside movement.
Yeah.
And then you just completely take them out right after. So just picture this structure in mind, right? Why I was bullish at 74K. Let's look at dominance. What do we have? Longs getting completely wrecked, longs wrecked, potentially another low, longs get wrecked, whatever it is. All this longs right here getting wrecked. But what do we have to the upside? That same thing. Why I was bullish at 74K. You got shorts completely laughing in money, lower highs, this whole way up, lower highs. So you're sitting on a bunch of people that are shorting stablecoin dominance. That's literally laughing and sitting in money that never got even liquidated or tested, not even once in this entire downtrend on stables. So in Bitcoin, the opposite reaction, it's these guys have never got tested as far as getting stop loss hunted since the lows. So again, just to make it short and echo what you're saying, it's a very rare time you see price make a bottom and fill higher lows the entire way up. You usually want to get lower lows structure and take out lows first to get everyone, oh, I'm getting stopped out on my longs. I'm tired of longing this. Give me way lower, and then maybe I'll consider longing again. We didn't really have that here. You had 3 months, 4 months of just upside structure where bulls had literally 4 months to build a long position. 4 entire months of us staying at the lows without them getting stopped out. So again, just to echo what you're saying, that's pretty much how I think of it. And we could easily see a stablecoin rotation coming in, which is us retesting that bullish structure that we've had literally since the top on stables, and same with total. You have your downtrend, retesting the downtrend EMA coming down. Bitcoin, same thing, retesting. You want to see this weekly close kind of come in, and that's pretty much it.
Yeah, even even when I'm looking at Bitcoin on the monthly, you're really just pushing into that low from April of last year, from the bottom, so yeah, it's kind of interesting, man. It's it's still early. There's a lot that can change. The part that's messing with me though, Steve, is we've typically, I think every other bear market, and I have to go back and I got to confirm this, so don't take my word as gospel here, guys. I'm trying to just recall off the top of my head, but I don't know that we've had a period where Bitcoin was in its bear market and equities were ripping. And then now, though, we're getting upside on Bitcoin to basically match equities. So does that mean that basically Bitcoin was just lagging equities? And in the past, is there any data that shows that it lagged equities at some point, like in a previous correction? So I'd have to go back and I'd have to take a look at that. Disbelief, says Electric Cowboy. We're in disbelief. Yeah, it could be. I mean, I'm not against
Could
it.
be.
I don't think Steve is either. Like we've both said that there's some clear technical levels where, you know, we're willing to flip and say, hey, you know what, something else is going on here other than what we initially suspected was happening. So, you know, I think that's the sign of maturity in terms of trading is you're willing to pivot, you're willing to put the data before you you know, before your bias, before your feelings and your own opinions. You know, you kind of put the data first. So welcome back, Landy, by the way. So yeah, we'll see.
I'm back.
Yeah, you're back, dude. You're back. You're back. So we'll see. I mean, I like when I'm looking at Bitcoin here, and I'll pop that down real quick, Steve. But yeah, when I'm looking
Yeah.
at you know, this to me still here is like still warrants having a little bit of caution. When I'm seeing this, it's like we're just pushing up into that on a high time frame. So quarterly makes it even more obvious. Quarterly chart for BTC makes it even more obvious. Like you're really just pushing up into what was a support area back last year, Q1, Q2. And, you know, we lost that in Q1 of this year. And now in Q2 of this year, we're pushing up into that. But what are you doing here though? Is you're running into the ceiling. I don't know if it's going to break the ceiling and go higher. It could, but I'm not going to pretend like it's not about to hit the ceiling here because that's exactly what's happening here. Like I'm seeing a lot of posts that are talking about this, and I don't know how you guys feel about it. But I'm seeing a lot of posts that are basically looking at this low back here, guys, from April of last year, and they're saying, hey, this, you know, we've now reclaimed critical market structure. We've now reclaimed like key market structure here by getting above that low. And I get why they're making the argument. It just, to me, I don't think that's the level to get above. Like I'm looking at, I want to get above this level here. But if we're going to look at anything, I want to see something happen on the quarterly or monthly. And right now there's nothing that's changed really here yet. So I'm still a little bit cautious. Landy, curious to get your takes on all this. Enrique says he's seeing people get bullish again. Well, there's been I think there's been Landy, you're muted by the way if you're trying to unmute, but I think there's been plenty of people that have been bullish this entire time. I think you have, what do you have? You have probably three groups. You got three groups of people. I think Landy stepped down. Is he back? Landy, are you back?
I see him there, but yeah,
I think his connection's dropping him. So yeah. I think you have three groups of people. Like you probably have three groups of people. And I would say you've got the people that have been bullish this whole time because they never flipped bearish. They were bullish at 126 and they were bullish at 60K. So that's like your group one, right? Has been bullish always.
100%.
Right. So like your perma bulls. Okay. Then you've got your second group. Your second group is they flipped bullish at the lows. So bullish at lows. Okay. Fair. Makes sense. I could respect that. You got bullish at the lows. And then your third group, and this is the most dangerous group, and this is what I'm concerned about currently, is you're getting the bullish at highs, or otherwise known as basically bear capitulation. Right? It's the people that have been bearish here trying to short this too early, and now they're either out of capital or they've taken enough of a hit. They've been put in enough pain here trying to short this that they're now saying, screw it, I'm going to flip bullish up here. Those are the only like three groups that I can really separate this into is perma bulls, right? Perma bulls have been bullish this whole time. They were bullish up here. They were bullish here. They were bullish here. They were bullish here. Bullish here, bullish here. Like they've just been bullish the whole time. right? So you're perma bulls, which is fine, but let's not act like there's some kind of smart, super wise trader that somehow called the bottom. If you were a perma bull, you can't take credit for calling tops or bottoms. You're a perma bull. You're always bullish, right? No, there's no credit for you for calling tops and bottoms, and you can't flex and you can't troll because you're always bullish. You're bullish when you're wrong and you're bullish when you're right. Perfect. No problem. I respect that. You just can't be trolling people. Then you have bullish at the low. Those are people that maybe were a little bit bullish up here, but then saw the trend change. They flipped to bearish. And then down here, they saw something that they needed to see. They saw either a setup or it just came down to a level where they started a DCA plan, whatever. Down here, they got bullish at the lows. Okay. So bullish at the lows. Perfect. I respect that. And if you're talking smack up here, to the bears, I can respect that. And I would say that's deserved. Fine. Perfect. Why? Because you got bullish at the lows. You're now in profit. You control if you want up here. You control. You can think the bottom is in. You can think that you got your forever long. Cool. You took a trade. You were bullish at the lows. You took a trade. Very well played. GG's, you're in profit. Respect. No problem with that. Right? And then you have bullish at the high, which is basically bears capitulating. And that's people that are getting bullish up here. As it's breaking higher, as it's going higher, you're getting bullish because now you're feeling the FOMO, right? You're feeling FOMO. And if you were trying to short, you were basically getting wrecked. You're just getting slapped in the face this whole time trying to short that. So now you're like, screw this. This trend is too strong. I'm going to flip bullish at the high. Right. So those are the three groups. I mean, Steve, can you think of another group of like how else would you separate this? I can't think of another one.
I guess bearish at the lows and bullish at the highs.
Yeah, maybe. I'd say these are the same guys though, right? These are like if they're bullish up here, they were probably bearish down here.
Yeah, exactly. Yeah.
But these are the guys that concern me, right? And these are the guys that I pay attention to in terms of sentiment, because these guys will mark the reversals. These are the guys that were bullish up here at the top of that range and then got bearish down here, and now they're getting bullish here again.
Yeah.
So that's group 3. This is group 3 behavior. Group 3 behavior is you're bullish at highs and you're bearish at lows. You're a group 3. They tend to mark the extremes, right? It's the ones that are now going on the timeline saying, all right, this is ripping so much higher. I just bought Bitcoin. I full ported. I'm ready to go. Right. That's a dangerous group, man. That's a dangerous group, that group 3. And then group 2 is trading it. Hey, respect. If you're a group 2, you traded it, you took a trade. I've got no problem with that. GG's, take your profits, make your money, dude. Like, good for you. Sweet. Troll, do whatever you got to do. You took a trade at the lows. You're now in profit. Group 2, well done. But then you got group 1, the perma bulls. If you were bullish the whole time, you're bullish up here, you're bullish in the middle, you're bullish you can't be trolling anyone. You can't be trolling anyone. You're bullish all the time. You're bullish when you're wrong. You're bullish when you're right. You get no trolling rights if you're just a perma bull. So, yeah, those are Ran is the third group with a lot of his followers.
Yeah, how many followers does Ran have?
I don't know, over 1 million, I think.
Yeah, that's like crazy.
But look, Ran, I almost put him as a mix of group 1 and group 3. I think Ran is a group 1 plus group 3 kind of guy, right? Enrique says he's a 4-year cycle group. That's fair. Yeah, 4-year cycle group. Yeah, so maybe there is that fourth group, right? Which is the 4-year cycle guys, and we'll assign them number 4 for 4-year cycle, right? 4-year cycle. Okay. No problem. Number 4. You play the game. Landy, are you there, my friend?
I think so.
Yeah.
Not quite sure. It's been a challenge. My apologies. It's been a challenge. I've been trying to connect for a while, but
Yeah.
for where I am right now, I was unable to bring Starlink with me.
Yeah.
So I am tethered to a cell phone, and
Hotspot it.
apparently,
Oh,
yeah,
Mm.
hotspotting from the laptop to the cell phone just wasn't
Mm.
working. So I was like, you know what? I'm just going to log in straight from the cell phone and see if I can get in there.
No. Wow.
So
So you're on your phone right now on a StreamYard. That's good to know.
yeah, you could do it right through the browser.
Okay.
So
Yeah.
yeah, so if you're on a Google device, I think actually StreamYard might have an app for Google now, but I
Yeah, it
don't
should
know.
be.
So,
Yeah.
but you can do it right through the web browser and log
Yeah.
into pretty much any one of these. So I know that you guys have been paying very close attention. Obviously, I was watching a little bit of your analysis prior. I think that you guys are breaking it down perfectly. I don't really have too much to add, and I can't even show a chart. But what I wanted to say was today now we have run on a monthly time frame.
Yeah.
We have now completely retested the 74.4 wick to the close open at 82.5, right? So
Yeah.
this is a perfect retest of perfect bearish retest, right?
Yeah.
And everyone is super excited, as you've been explaining.
I know.
And something to consider, and I know you guys don't use Bollinger Bands, so I'm going to be a little bit of a devil's advocate because it's something that I floated near the highs when we were talking about whether or not um, I was going to turn into a bear after we got the 123 to 125 move. We talked about how many of us were taking shorts and filling shorts in that area. Many of us were looking in that area, 123, 125, maybe even up to 128, 130, depending on, kind of where the analysis was at the time when we were all speaking on stage on a Spaces event. But many were in the camp of this is the all-time high. I said I'm calling this the local. I want to wait to see the break of structure to confirm that it is the all-time high and it's in. Now, of course, we broke structure, and I said, "Hey, I'm right there with everybody. Absolutely, you were correct. It was the all-time high, and now we are in a bear market." But one of the things that I offered up was be careful of this becoming a deviation of trend on higher term timeframes. And that specifically is a monthly. And for those that utilize volatility very heavily, like myself, as a metric in which it's one of the core pillars of the way that I trade is I trade volatility, right? And on a higher term time frame, like a monthly and like a quarterly, we're getting volatility compression at the highs, which is very interesting. So I was curious to ask you guys. I've laid out the case a few times through, talking with you guys on stage and through um, my videos, pretty much since the highs, is beware that this could turn out or potentially turn out to be a deviation of the wider trend because we are in a compression on longer term timeframes. I know that you guys don't use Bollinger Bands, but even if you looked or through Bollinger Bands set on the chart, just like a regular one, you'll see the upper and lower bands are squeezing at the highs. And I'm not looking for a volatility breakout until we either close above or the top side band or below the bottom side band. And a deviation is more likely because typically price on higher term timeframes bounces between the bands before resolution. So I was curious to hear your thoughts on what would change your mind in terms of what price point would you need to see closes above and then what time frame that would maybe start steering your eye towards this potentially being a longer term deviation of trend.
Vince, you might as well take it because we have the same thought.
Yeah, look, I think on on a shorter, more immediate basis, well, I say immediate, but really I'm talking about the weekly here. But to me, that's shorter when we're considering monthly and quarterly. Um, I'm perfectly ready. I think once we start getting above this last swing high to consider that maybe something is happening. And even I'd even say even if we start showing some strength above the yearly open, I start to get a little bit cautious in not being overly bearish. Um, one of the things we looked at as well was Bitcoin against gold, and I just pulled that up. But it's getting a heck of a bounce here. It's getting a nice little bounce here against gold. And I've had this, we've had North Star on a couple times, right? Like over the this month and last month, I think he's been on 2 or 3 times. And he's still kind of maintained his capital rotation thesis. He's pretty much said, yeah, they can maybe cool off a little bit, but it's a process and it can take a while. And until really gold starts to give some of the gains back to the different sectors, nothing's really changed for him. And I look at Bitcoin over gold, and this one's a little tougher because you don't have really like a swing anywhere in this trend, at least on a monthly basis, that I'm paying a lot of attention to. On the weekly, I would maybe say this, like the somewhere between like 20 to 22 on that BTC gold ratio, is maybe an area of interest, right? You had some lows back here previously to pay attention to, but on a monthly, it was such a change in character for the chart here. It was such a drop here that you may as well say that, like, if this thing is going to push up really on a monthly basis, I'm almost needing to see it come all the way up here. I wonder what the quarterly looks like. Yeah, I mean, if you start getting some closes above like previous quarter, maybe I'm paying attention, but I think it almost needs to come up here into the 30s, mid 30s on a Bitcoin gold ratio. But what's interesting here is that you really didn't break any of like the longer term structure in terms of like the quarterly chart. The lows are still preserved, which is quite
Yeah.
interesting. So, yeah, I mean, is there a potential? You kind of had like equal highs here, but you still are putting in higher lows. Really, I'm going to measure the strength of this trend based on the lows and not so much on the highs. Like it's invalidated for me when there's a break to the downside, not to the upside. We had just pulled up. We were on a space a little bit before we jumped on the stream, and we were looking at equities against gold. Equities are getting a heck of a rally against gold right now as well, which feeds into my thesis that gold, silver, and oil are potentially topped, at least for a little while. And but when you invert this, it looks a little different. Like when I invert this, it almost looks like it's doing like a sort of a bullish retest here to potentially make the next move up. But that's inverted, which means that equities are going to continue to bleed against gold. So then I'd have to think, okay, well then I probably need to be looking at Bitcoin against equities then in that case, right? Because then that's what I'm interested in. When I'm looking at this one, this one I have much less of a clear read on, Landy, right now is Bitcoin against equities. It definitely came down to a prior low here and took it out, but it's within where I would say there's like a margin of error here, that it didn't break it in such a violent way. It didn't put enough time and distance between that level, I guess, if you will. It's basically at it. Sure, it's to the lower side of it, but it's basically at that level. So I'm almost wondering if there's a case where BTC is actually getting ready to pivot to the upside against equities as well. I think we're closer to finding out. I have a hard time thinking that we go another quarter and still not really get clarity on that. So we've got a little bit under 2 months left in this quarter. But this one I don't have as clear of a read as the other ones. This one I need to spend a little bit more time on. I'm curious if you have a take in terms of BTC against these equities, but it's, man, the stock market's just been wild. Like it's hard to really try and get too bearish on this. I mean, we know that this is just a function of the fact that we can just print more dollars, the fact that participants know that it's caked into the economics of this chart. And dude, I mean, this thing just looks, I don't know when this thing could or would turn around. I think it could keep going.
So, when my contention has been that gold versus Bitcoin, gold versus equities, seeing the tops that have been put in there is more a function of gold's strength versus devaluing currencies around the world, right? Not just the United States, because the stock market in the U.S. is participated in by everyone around the globe within within the unsanctioned structure, right, for
Sure.
monetary systems.
Yeah.
And it doesn't necessarily even have to be when you see a capital rotation, we see brand new highs on something like the stock market. We see Bitcoin doing its retest and stuff like that. I think that what you just showed there with Bitcoin versus gold and Bitcoin versus equities is that Bitcoin versus gold is in a much wider range, right? And it's
Yep.
tagged around at prior lows. But more importantly, as it was making new all time highs, it was not doing so against gold, which kind of speaks to my theory, one of my theories, if conditions are met, because right now this is a bearish retest for Bitcoin. And
Yep.
even, we could rally all the way up to $98,000 and swing above it, and I still wouldn't get bullish in terms of macro low being in, mainly because I would need to see close over close on the weekly at minimum above $98,000, that last major downtrending swing high. The first
Sure. Yep.
real downtrending swing high before, after the structure break.
Yep.
So, this is a bearish retest in my book. I'm still bearish on price, although I have shifted to predominantly long and exiting a lot of the longer term swing short side. I'm still holding on to some of it.
Yeah.
Um, and now it's just about opportunities. Took the bids off the lows. We'll take the bids off any new lows or anywhere around the lows. I'll continue to bid there and under, just per my strategy for risk. But the long form consolidation that Bitcoin is doing against gold and against equities in longer time frames at the highs speaks to the consolidation versus USD that I'm seeing in terms of a lower volatility environment. With gold, it's just in a much wider range, but the volatility is still
Yeah.
coming down. It's just volatile within a bigger range. And that would kind of point to me that as we see Bitcoin adoption accelerate, that we likely see it play catch up, right? And here's the interesting thing: when you look at the gold versus equities chart, equities are making brand new highs and barely a move off the lows so far for against gold, right? Because gold appreciated in value so much that we're getting significantly higher highs in equities versus gold right now. That could be something that we, if conditions met, start to see in Bitcoin as well. If it does turn out that way, especially a deviation of trend on the wider trend for longer term timeframes, I'm only keeping that door open, and it's something that I've talked to you guys about because Bitcoin
So hold
is
on, hold on. Let
only
me let
just
me let
now.
me
Yeah, go
repeat
ahead.
that real quick, just to
Go
make sure
ahead.
I understood you correctly. So essentially, you're saying we could potentially see Bitcoin make new high in USD valuation while not not really changing the current Bitcoin versus gold trend, meaning it doesn't have to break out against gold.
Yes.
Or is that the opposite of what you were saying?
Well, no, you got it right. So when
Okay.
you were looking at
Okay.
the topside structure
Yep.
that you can foresee Bitcoin versus gold going to,
Mm-hmm.
that to me would probably look like Bitcoin trying to go back to and maybe even run the highs,
Run the
the high
high.
side
Yeah.
structure.
Yep. Yep.
And that doesn't mean that it's going to break out and absolutely go on a face melting bull run, but it would be something that would be in line with my thesis for deviation of trend and possibly even a swing. And I mentioned this, I believe, yesterday when I hopped up on stage with you guys during Cade's morning show,
Mm,
and I had mentioned that one of the things that we have not seen. From a fundamental side of things is Bitcoin typically has a post halving capitulation event. We got one very, very late when we had already
right.
broken structure to go into the bear trend. But every post-halving, and I'll use the most recent post-halving capitulation event, 2021, we hit $65,000, dumped out to 28, and then rallied all the way back to swing the high, but not close above on any meaningful time frames, right? We rallied to 69K and then immediately dumped out into the bear market. So when I'm looking at the potential for a possible deviation of trend, you can see that there are conditions that we can watch that are pretty easy, right? We can watch oil prices. If they continue to hang around here and then try to dump out, that risk environment favors heavy risk on, right? Plus, we're getting a capital rotation into the US markets from Europe and Asia right now. And that we'll see how long that holds up. I would watch the bond market very carefully. But what we're seeing is, at least on the equities side, a lot of capital flight, right? Because there's demand destruction that's really starting to roll in Europe and in Asia. So that capital flees to where it can actually make some money, right? And that happens to be pushing, equities much, much higher, much, much faster. And they are nowhere near the gold pair highs, nowhere near. And if we see a positive risk on environment because of the way that Bitcoin and cryptocurrencies are viewed, you could potentially see a world in which we do get a wider deviation and potentially head up to those highs. That would make for a very muddy picture for both bulls and bears, because in terms of volatility, which is what I measure, it could literally knock around in a much wider range, very similar to what we see the Bitcoin versus gold chart, just a very large volatile range that fails to make new highs against gold but makes new highs against USD. Just a thought experiment, and it is one of the I'm not trading based on this being a macro low, but I think that it's worth watching some of these things, especially the risk environment as it relates to energy, and then watching that capital rotation in the bond markets and in the equities markets from market to market. Because when we're not reducing global liquidity, right? Global
Yeah.
liquidity that the perma bulls always like to reference is continuing to rise. It's all about where's that capital trapped and can it move? And the easiest way for it to move right now is to move towards U.S. markets. Um,
Oh,
Black markets typically go towards crypto, right?
Yeah. You know what's and I pulled up oh, I already took it down. Hold on. Here, let me switch back to that other view. While you were talking, I went to the 6-month view here for that
Yeah.
Bitcoin gold chart. And look, there's still, nearly 2 months remaining, but if we close anything similar to what it's currently looking like, I mean, those are typically pretty bullish candles, kind of all around. They do tend to mark reversals. The candle before this doesn't have a lot of wick to the downside. That's also usually pretty good in terms of expecting a reversal. So, look, I mean, if we come back and we look at like 2015, is there a scenario where this closes kind of something like this? It hangs out up here around this area that we're currently in, and then the next 6-month candle, has like an initial manipulation move to the downside that cleans up a little bit, scares people out, and then still goes higher, right? So there's just so much time when you're looking at the longer time frames for things to kind of move and breathe. People get so hung up on what's happening on the 30-second chart and the 1-minute chart. It's wild. But yeah, dude, I could see that. I could see, like, it would not surprise me if from here, if this is a bottom against gold. And again, if we close in the next 1 month and 25 days, if we close with any kind of, wick like this to the downside, where the majority of the candle is a wick to the downside, I'm gonna say I'm gonna be favoring a move to the top side. Maybe it doesn't go all the way to the top of that previous 6-month candle, but maybe it goes up 50% of the way or something. I definitely would be paying attention to that, because at that point, this is looking like, yeah, like your trend is still just doing what it's been doing, up, cool off, up, cool off, up, cool off, up, cool off. Maybe
Yeah.
continues.
I mean,
Dude.
I could also see a long form consolidation at this level versus gold.
Correct. Yeah,
Yeah.
correct. Yeah, you just build a range up here. I mean, you can already kind of see it.
Yep. Yeah, and
Yeah.
that would also provide for my primary thesis is obviously I've explained this to you guys, but for the audience, my primary thesis is bearish retest, even if we go higher,
Yep.
and then we at minimum try to come back down, fill liquidity off of the lows, or potentially get another leg down, which is very, very viable, right? The trend's your friend until the end of the trend.
Yep.
Um, so you guys obviously, I respect the ever loving hell out of you guys, and you guys have obviously um, illustrated to the audience what your immediate thoughts are. So that's one of the reasons why I wanted to kind of go a
Yeah.
little bit higher time frame. So have you guys taken a look at oil today?
No, not today, not on the stream, man. But I'm happy to pull up the oil futures chart that I've got on here, or unless you want me to pull up WTI for you or something. But
Which one is this one? Is this
these are just crude futures. Yeah, the CLIs, CL1s. I mean, sorry.
CL1? Okay, yeah.
Yeah.
I mean, CL1 is going to be it's going to have pretty much price parity with WTI or
Yeah, they're
CFDs on
about the same.
WTI.
Yep.
Yeah.
Yep.
S- So I'm curious because I have some key levels that oil is hanging on right now. Um, my contention is that we're in a range between 98 and 102 and a half, and we're either going to break down towards main support at 90 to 95, or head up to test the 110 to potentially much higher. 112 was the last kind of retest that I was looking for, and then possibly holding this area as support would, if it, even if it gets violently slammed down into it, if it holds it as support on the longer term, that we could potentially see it try to appreciate past or back to those highs. Although, looking at it today, which this would be, I looked at it early this morning, this would be a pretty nasty sell off, kind of indicating that this was a bull trap rally. What's your
Well,
take on it?
you remember, like, this was my take, right? I drew a very simple, very elementary trend line on it, and I put a circle of where I thought oil was going to top, and it hit it. I mean, like, the only difference was that this circle, I had it a little bit off to the side, a little bit earlier than what it took. It took took a few days more than what I thought it was going to take. But yeah, I don't know. I don't have much clarity here. I just know that I was looking for a lower high here, and I still think there's a case where this low is maybe still an area of interest. It basically would kind of be doing some kind of like channel, you know what I mean? Like, you'd have volatility range here that you can kind of look at. Um, so yeah, I think if this median area here of the channel doesn't provide support, and that's right in line with that 90 that you were talking about. If this doesn't provide some kind of support, then I think it still favors a move down here below this low that was put in last month. Steve, do you have a take on it? I mean, I haven't, because I've just been looking at the short term for oil. I haven't done a lot of like macro analysis on it, and yeah, I was looking for that short, man, and I think if I was looking, to buy anywhere, I think it'd have to come probably take this low or get very close to that low again for me to be interested in trying to position the other way. Otherwise, I think what I'm looking for basically is to see if it does provide support here, and I'm probably waiting for it to take out this last high that it put in, and then I'll just participate on the momentum of that move higher, as opposed to trying to take a position here kind of in the middle. I hate trading the middle of any kind of range or channel or anything. I'm a trap move kind of guy. Like, I like the sweep of the extreme. So yeah, this is really not somewhere that I'd be able to participate with any kind of confidence. Steve, I don't know if you have a take. I'm happy to throw your chart up, dude.
Well, I'm the same thing. I don't like trading middle. I think it's clear that you do have your range levels on oil. That you have your extremes, which are the lows, which do rest under 79, and same thing to the highs at 120. Well, like in my opinion, for me to look at a trade on oil, like we've had a huge breakout. Like the consolidation we had here in the bullish divergence we had on oil, literally for the last since 2-3 years right here, was clear that
Hey,
you
we
were
got
trying to get something.
David G came on. He says, Jesus, Landy is everywhere. Shout out to David
Too
G.
true.
Yeah,
Too
man.
true. What's up, David?
Funny stuff.
Yeah,
But
it's just
but
extreme
Steve,
levels.
like I think what you do that I don't is you use like the MVRV or use the Z score. Is there any alpha? Like, is there anything we can read off of that that gives us any kind of insights beyond just the structure and the volatility range?
Uh,
I mean that low right there looks like it's in terms of the Z score, it looks like it's lower than everything else in that upper range, huh?
yeah. Well, once you came down here, you're expecting some type of rebalancing to the
Okay.
minimum, just because you don't want it. Like your Z score won't plummet down to the -6.
Yeah.
But I like using Z score just because it will always tell you like when we're in extremes. Like same thing with your gentleman suite. Like
Yeah.
when you're in your extreme levels, let's say here when you have your bullish div, that price is making these higher lows, but we're coming into extremes time and time
Ooh, that is
again.
some interesting
It
divergence
was
right there.
it was a
Yeah.
yeah, very, very nice. But like Landy said, with the highs, zooming back to the weekly, when you're looking at 2022, you still have this lower high structure, a lot of
Mm,
liquidity resting at the 120s, including the range that we even have here at these highs. So
yeah.
it's just for me to even think about longing, like you said, I don't like mid ranges. I would really like a sweep of this in the 72s. So if I'm looking at this on the 4H, like I'm trying to get any type of extreme, which would be you have your
That,
extreme
that'd be
highs and your
juicy. That'd be
yeah,
juicy
so if
down
you
there.
come here, yeah, maybe a deviation, I don't know. But that's the only thing I play. If it gets extreme enough, I'll look for a long, but if it doesn't, I just ignore the chart until it does. So I don't know. For me, the really nice downside move. I don't know if any of you guys caught a short on this. The short on the downside bits, you had your
Yeah.
trend line. Oh, Landy, you had one
Yeah.
too?
Yeah, I was filling shorts near the highs, and if we were going to spike higher, I was going to fill quite a bit more. I got some fills in on this move down with my take profits set at 90, and we swept under 90 today.
Yeah.
So
That's
Yeah.
shout
beautiful.
out to one of the long term sponsors that you know using Cold Wolf, which is Ostia.
Sweet, 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 sweet.
That was the next
Yeah,
level.
what a new dude, we're in such a different market now that like you can just do so many things with your crypto now. It's pretty cool. You can do a lot of stuff with these stables as well. So crazy stuff, man. Yeah, but that's I mean, Landy, I don't know if that answers your question, but that's about as much of a read as I have on oil right now. Like really the only like I started paying a lot more attention to the chart when it started to pick up a little bit of heat off of the lows, started to get some attention, and especially when North Star started like talking about oil should follow gold and
Uh-oh.
silver, and I was heavily trading and watching gold and silver, right? And so I was like, all right, like something's happening here.
Is that me?
What happened?
Must be me.
What
Must be
happened?
you, man.
Uh,
Must be Landy.
did Bit stop talking?
No.
Yeah, he's talking right now. You don't hear him?
No. Let me drop and come back.
Hold on. Let me just remove him and see if it lets me put him back up. What about now?
Oh, he's muted now. Oh.
Maybe he's gonna jump off. Okay. Yeah, like if I start, what I haven't done recently is I haven't looked at the quarterly on oil, but the quarterly, at least on the futures chart, it's a mess. This thing is a mess.
Yeah.
I mean, I think we could agree though that there's going to be some liquidity up here for sure, right? Like there's going to be liquidity to the top side. That's pretty clear. But other than that, man,
It is nice the range it's in. It's really it's sweeping liquidity very nicely. Like the short for the high
yeah,
that we had like 2 days ago. Beautiful, beautiful shorts. Nice sweep of the mid range. Um I don't know, it's so volatile to where like it's one of the best charts to look at right now in the markets when it comes to the upside
yeah,
downside. Moves so drastically, but it's respected so like nicely as well. Like when you're getting your sweep under the lows here and you're getting acceptance back in, look for a sue above the highs, acceptance back under, which you got again like that. It's like it's actually behaving really nicely when it comes to a chart. But if we're looking at high time frame and more of like more extreme levels, it's very clear what your extreme levels are, and it's pretty much sub here of here. So other than that,
Yeah,
just trade the up and downs.
it does form really clean lows and highs, like very, very, very clean. I do like that.
Very clean, yeah.
Landy, are you
Including
back?
I think so. Yeah.
All
I
right,
was going to
cool.
ask
All
one
right.
of you, when you're on the daily there, can you throw a just a simple Bollinger Band set on there?
Bits, do you got that?
Just pull it up. Just type it.
Here, what how do you spell Bollinger Band?
I'm just I'm curious.
Bollinger Band strategy. Like, how do you do this, dude? Look what I got right now.
I love the simplicity.
How do you? What is this right now? What am I looking at?
Just
Yeah, let me
not the strategy. No. Poor Steve.
Dude,
Steve was
dude,
like,
I
what
don't
is the
got this,
Bollinger
dude.
Band? How does this work? What is life? No, just pull up. TradingView has a built-in Bollinger Band.
Oh
So
no! Hold on. We're not.
BOLLINGER,
No. Look, no.
and they have a built-in that you can
Look,
look at.
This is a plug for the gentleman's suite here.
It should
Check
be
this
just
out.
TradingView Bollinger Bands. Yeah, there you go.
Look at this.
So
Look at this.
if you look at the daily,
Where do I have
you
it?
can see this is weekly expansion right off the mean. Um, so if you if you just put the regular setup, you
I don't
can
want the
see.
regular setup.
I can walk you through what I'm looking at real quick here.
All right, hold on,
Um,
Landy. Hold on. Let me.
you can see that the consolidation on the weekly resulted in a move to what was a midline, which I don't think is on there right now, or a 20 simple, right? And then the retest and takeoff from that 20 simple, which is your basis. Um, that's pretty much your expansion phase, but this was expansion back to the highs. So for me, I'm looking at this in a very different way than you guys, but coming to the same conclusions even on the lower term time frames. So like I love watching what you guys do and how you chart, because it is a very different methodology than myself. But right now, what we're seeing is we had a giant swing side of on the expansion phase, which was trending above the upper band, right? And then after getting a correction back down, you can see that it's just bounced to the band again on the upper side, which is volatility normalizing back to the mean, and then a swing above the upper band, and now we're creating a bit of a range. So above the most recent highs that were put in, I believe 111 or so, 110.90 something. Anywhere above there, I'd be looking for expansion pretty aggressively back to the highs and potentially higher for continued expansion during an expansion phase above the all-time highs, or not the all-time highs, the most recent highs around the one, expansion starting above the most recent high to the highs, your 115 to 120 areas and potentially more. And to the downside, if we do break the low side structure, I believe that's $76 a barrel, then we're looking for, in what I believe would be right around the 68 to 72 area as a support, obviously 72 being the main area there that I would look for a retest on. I believe that falls pretty much in line with what you guys were just talking about.
Trying to find the Landy bands. I added them to my favorites.
I just
Not
set up
showing
my
up on the
Bollinger Bands. I'm testing it out.
Did
Look
you
at
really
you.
set it up?
I
Hold on,
got it
hold on.
working. I got it working.
Let me reload.
I mean,
the
I
tab.
use a triple set, but that's because I track volatility at the very large extremes, which is what got me short
Oh shoot!
above
I got Landy
the
bands.
or right into the overhead resistance, because I don't just use Bollinger Bands. I use support and
Yeah,
resistance
100%.
in combination. And when we went right into the 115 to 130 area, the high time frame overhead resistance, we were extending well past the upper third during an expansion phase. So I knew at minimum I could get some positions in the shorter term And we ended up seeing, of course, a nice drawdown, right?
It's nice for extremes. Like when you exit them,
Yes.
it's nice for extremes. Yeah.
Hey, I
And
don't
now
think
we're just
Landy can hear me
ranging.
still.
So to your guys' point, um, you can see kind of the confluence with when I'm looking at what you just charted, Steve, and what Bits just charted. We are literally we're set up in quite a nice range where the extremes on closes would continue to test higher or more extreme higher prices, extreme on closes below would test those lower prices. So I just find it very, I find the confluence very interesting. So
Yeah. Even
now,
for me, I might start using this a little more. It's really nice on extremes. Even when I'm looking at Bitcoin, when we get into extremes, for example, your 60K lows and your 80K, when you get into extreme downside or upside, it is nice.
yep. Yeah, it's just
Yeah.
one. It's an additional piece. A lot of people use various indicators for volatility. I like to use conditional based volatility expansion and compression. So essentially, if we're going to close outside of the upper band or close outside of the lower band, we need to meet two conditions, right, for volatility expansion. That would be not just closing, like, let's say, below the band there where you have your cursor. We would also need to see the breakdown for the volatility expansion to continue, because typically upper bands and lower bands at the extremes are your reversal or pivot points. But if you break a support or you break a resistance, you're getting continuation of that expansion. It's very, a lot of people have trouble with that concept. I know that you guys probably understand what I'm saying about it, but what I like is the confluence for where it is and where you guys are looking as well. So I think it's really cool.
Oh,
I saw
Steve, you
bits.
can't. Oh, throw your Landy bands on there. Dang, look at this guy.
How did you do this so quick? That's the question.
Don't worry
Like, dude.
about me, man. Don't worry about how I do things.
Oh, see, this is weird. I can't even hear bits now. This is not okay. Come on.
No way. Bits, do you hear Landy?
I can hear Landy. He just can't hear me.
Yeah, that. Yeah, dude.
Yeah.
It's like, dude, oil's in such a nice compression though. It's really just like trade what you get while you're in this compression until it's like not. Like this consolidation is really beautiful how it's behaving. Um, especially like, dude, even when you're looking at these bands, when you're getting like, yeah, it's
Ooh,
really behaving
look at that
nicely.
last move down there. Yeah. Look at that.
It
That
behaves
last
nice.
little move.
This is why I like the group we have in Wolf. Like we all trade very
Yeah.
differently, but our confluence is always the same thing, just with complete different strategies. That's what's so interesting about trading. And also why it bothers me so much when people say TA drawing lines doesn't work. Dude, we could have 30 different like types of trading, and a lot of the times they could all align up to the same thesis.
Yeah.
That's not a coincidence. Like, you're not like there's TA in everything. It's just how you do TAs, and they behave respectively as well.
Yeah. Agreed.
Yeah.
Landy, are you
Yes,
back?
sir. I can hear
Landy?
you. Yeah, I
Dude.
don't know
There
what
it
the
is.
problem
Look,
is.
I got Steve set up with the Landy bands. I threw the Landy bands on. We're all doing the
Oh,
Landy
very nice.
band dance, you know, like
The Landy Band dance. I love it. Look, this is just one part. I keep this as an ever present just metric for volatility. I
yeah.
do not take
Yeah,
the bands as a be all end all indicator of any sort.
yeah,
So,
100%.
um, but it's just like anything else. Some people like different measures for volatility. I think that your Z score is a good metric as well. One of the interesting things that I find, and I would love to talk to Northside. It's been a while since I've had a chance to pick his brain because I think he's a brilliant guy. Um, is that the oil markets are so reactive to supply and demand. Um,
Yeah,
that whether it be increasing supply and decreasing demand, or increasing demand on a fixed supply, or in the case that we've seen more recently is supply restrictions while demand continues and even increases in some cases for some countries. um, that if we continue to see demand destruction, and we continue to see supply increases out of the West, in terms of, the United States and South America. And then we continue to see OPEC nations, either were prior OPEC nations like UAE and other nations that might still be a part of OPEC, but continuing to kind of take the foot off the brake of supply. I'm not sure. I'm not sure that I even see the technical structure outside of the fact that we've broken longer term areas of interest to the upside for oil. I'm not seeing the same type of continuation. Although, to his credit, you don't see it when you're in it, right? You see it when over time it becomes a building confluence that becomes a reality. So it's very, very interesting because we often talk about the shorter term timeframes and kind of what our trade setups are for trading ranges. Obviously, I'm just like you guys. At the extremes is where I like to position major supports, major resistances, that kind of stuff in confluence with that. But the higher term timeframes, um, even going back to my days doing this professionally, were less of a focus for me unless we were, putting out investment dollars, like, into certain companies or something. So yeah, I would love to
Check
pick
out
his brain
gold. Check
on
out
some of
gold
that
on the
longer
Landy
term time
bands.
frame stuff when it comes to oil, because that's going to be the driver. And I think that's going to be the driver for many years to come.
I think Landy can't hear me again.
Landy, you can hear bits?
Okay.
I don't think so.
This is just not
Yeah.
allowed. I'm gonna listen to it through the stream.
Dude.
Why does it do that?
No, I can't hear bits. I can't hear either one of you.
He's
I can
dying
hear
of
the delay
laughter
through
right
the stream now.
Oh,
He's dying of laughter. Landy,
so
for oil, the supply shock that we're kind of going through in this whole oil madness right now. How do you do you see any correlation to what we're seeing, let's say, with stocks ripping, oil going through its phases going through with a supply shock? Do you see any correlation to what we saw in the 70s where oil started to come in? Like if we're going back to, I don't know if you look through past recessions or past
ooh, he's
downside
gone.
moves. He's really?
Yeah, he left.
Oh, I just wanted to hear. I needed to hear that opinion. I love hearing Landy's take when it comes
let's
to
see if
that.
he comes back. Yeah, let's see if he comes back and if we can get him on here.
Yeah.
I don't know why he keeps dropping like that though. He's back. He's
He's
back.
back?
I'm listening to you through the stream.
Yeah.
Yeah.
Can I do a Landy take
question?
real quick? I'm looking at
go.
gold here and it's at the basis. And if it goes to the upper first at 48.22, then maybe we can see it go to the upper second at 49.20. And if it goes upper than that, then it can go to the upper third at 50.21.
And if it breaks, it'll go on an expansive run.
And if it goes, there you go.
if it goes up, it could go upper. If it goes down, it could go downer.
Yeah. I need to watch more of Landy's Monday reviews that he does. Are you doing those more than you're doing them like what, twice a week right now?
3 times a week typically.
3 times
Monday,
a week.
Wednesday,
Okay.
Friday.
Yeah.
Yeah.
There you go.
So to answer your question, Steve, yeah, no, I've done the long-term studies, and this does not resemble, in my opinion, it's a variation of what we saw in the 70s, but I'm not looking when comparing to what was fundamentally happening, something very different fundamentally is happening of the energy markets.
No, you cut out for a second. My bad.
No, it's because when I change screen, it drops Landy to this one for some reason, but he's good.
Okay.
Yeah. So what I was saying is like the outlook for the fundamentals is very different than it was in the 70s, even if you can draw some correlations, right?
Yeah.
So I'm looking at this as the world is now understanding that they need to focus on energy procurement and production, and it's not swinging in the side of of the shift is happening away from the green energy stuff. Although that will continue to be a hedge that's built out in many nations, the primary focus, I think, in the next 5 to 10 years will be build out of the underlying energy infrastructure that facilitates the build out of the green energy infrastructure, which I think you can't have one without the other, right? And I think that now that nations have experienced what they've experienced, especially in Europe and in Asia, the energy crunch has exposed a lot of risk. So that would naturally, with an exit like out of OPEC from UAE, South America starting to spin up more production, United States continuing to ramp up production. I think that we end up in a world where supply, in the near term, is going to catch up to meet demand post conflict, and then start to accelerate to refill, and then continue to accelerate to drive down costs for the hedge build out of energy infrastructure on the green side. So, because the fundamentals have shifted, in the 70s, it was a shift to OPEC and OPEC plus and away from sovereign nations producing their own energy. I think we're going to see that shift come back to sovereign nations producing the more energy they have if they have the ability.
Oh, the pendulum swings, huh?
Kinda, yeah.
Mm.
And that's just my initial read on things right now. Things could
No.
change very, very quickly, but you don't
Yep.
typically, even under the Biden administration, um, they canceled like new contracts, right? But they did not spin things down in their entirety. In fact, what was put in place by the Trump's first administration in terms of energy production, you maybe saw state by state some stuff come out, but from a federal level, the output remained around the same metrics, right? Still a very large producer of oil and natural gas. Um, it's just that the demand post COVID was it was an extreme volatility spike for demand, right? So
Right.
that's what eventually knocked markets down. And at the end of 21 coming into 22, 23 is you had the catch up period. Everything's booting back up. And I think that now, with kind of a little bit of a wake up call for uh, Western nations in Europe, and then Eastern nations and um, in Asia, this becomes a, hey, we have to build out much faster, and we also have to rely on this to do that build out. So the movement towards nuclear, the movement towards production of fossil fuels continues until morale improves, essentially. We'll
Dude,
see
we
if
gotta
I'm
get
right.
yeah, we definitely gotta get you and North Star in a room together soon.
Yeah, for sure. They would
Yeah,
go on for hours.
We'll throw in
probably.
Joe Carlosari in there just for fun,
Oh,
just to
for
shake things
no.
up.
That's
Oh, oh man, you know that I can talk,
or dark
brother.
side or something.
I can talk, but I ain't getting a word in edgewise because the two of them are going to battle if that's the case, man.
Oh, that would be wild,
you get it.
dude. That's crazy.
I
Uh,
wanted to ask one more thing, even to you, Biz, for both of you.
yeah, go for it. Yeah.
Like even with SPY, what we're seeing in the whole markets, everything. Do you guys think? I'm sure you guys agree with this. I guess maybe you would probably say it's more of a ticking time bomb than it could happen right now. But as far as credits and people, let's say loan defaults, everything what we're seeing right now in the markets that we've been seeing, honestly,
Mhm.
for a while now, especially the last 4 weeks, even people taking out credits to go into riskier assets, and people, everything just investing just credit wise, everything's just built on credit and not really with real capital. Would you guys consider that a warning sign like right now? Or would you say it's more of a ticking time bomb, like the Fed will just get their way out of it at some point, or like even if we go down, you get what I'm saying? You guys trying to understand what I'm saying
Yeah,
or no?
Yeah.
yeah. I would argue that it's a bomb that is being actively stuffed with more explosive ammunition or powder, meanwhile trying to be diffused at the same time. And
Yeah.
But you know what worries me about
yeah.
that though, guys, is I feel like there's an overwhelming majority in sentiment regarding this that it can't possibly implode anytime in the near term, that it's just that it is that ticking time bomb, and that I don't know, like this perpetual sense of we can just keep kicking the can down the road, and we're gonna be fine. Our kids are probably gonna be fine. Like, this is not a big deal. It does concern me a little bit, the fact that we do think it's the fuse is long enough that we've probably got more time than we actually do. Like, I know you can't quantify that, and it's hard to even really speak to it, but it's like I am picking up on that, and it does concern me. But at the same time, to Steve's point, when he's in asking that question, you are saying basically what we've all heard, which is we've been hearing this for a while. It's
Yeah.
been the story for a while. Kiyosaki's been talking about this for forever. Bitcoiners have been talking about this since the beginning of Bitcoin, but even since before that, gold bug, silver stackers, everyone's been talking about this for a long time, and we've yet to see it implode. But does that mean that we're actually closer to a D-Day type event than we think we are, or is it this thing that we can just keep kicking it down the road? We print more money. We just keep playing the same games we've been playing.
Well, so I'm of two minds on this. Like, yeah, you bring up a few really good solid points, both of you do. One of the big things is, in regards to this kind of a conversation, is that it's already been a long fuse, and it's a matter of how much longer is the fuse, and
Yeah.
what is being done to defuse the entire situation. Because look, if we have a mass deleveraging event in the US markets, it affects global markets, right? Because it doesn't matter if you're on Swift or off Swift, because of how interconnected the world is, um, that global markets are all tied together, and we're all tethered to this fiat currency, to various implementations of fiat currency systems, right? So I can foresee a way in which there is multiple outs, but if there is not a larger consensus from the majority on which out that is going to be, then we get the D-Day type of event where things absolutely crash to normalization, right? Because it's not a bad thing. What you would end up with is not just, we would see exponential levels of bad debt, debt that is unserviceable, and
Mm,
therefore it is no longer valid debt, right? Because you wouldn't just see it in the United States, you'd see it globally. And the network effects of it would take out all of the major players that people keep, wringing their hands about when it comes to BRICS and China and stuff. Like, I'm sorry, if the U.S. system implodes in a mass deleveraging event, it takes out Europe, it takes out
Yeah.
Asia as well.
100%.
It doesn't matter anymore, and it's just about who then is rising to the occasion to become the consensus that we're going to be using in the future. Or are we going to split into decentralization, yet again without any major player? And you can see what the United States is trying to do, and Russia is rightfully called out what the United States is trying to do with Genius and cryptocurrencies, and offloading that debt essentially through force, right? Through a managed switch to a different system, where it is a completely different system that looks very similar to the current system that we have, which is what China has already done, right? And now it's a matter of what is backing this, right? What is backing it? What is going to give investors confidence? What is Do we continue the inflationary rate that we're on? Because of the way that we measure growth globally, there is no easy out off that ride. right? Because the moment that a country's GDP drops, even though it's not, I don't think it's a very good metric, the moment it drops, investment begins. It's because you're seeing a disinvestment in growth for that country through various factors, right? From the economy to the markets to spending to whatever it might be, and they can keep pushing the ball and kicking it down the road. You got to understand that the debt to many of those here in the United States in control of the treasury, in control of the highest levels of government, and even in the banking institutions. While it's scary because a deleveraging event causes a lot of problems. It's not scary because the number, to them, it's not scary because the number keeps getting higher, right? Because spending is a part of GDP. If they decrease spending, and one of the reasons why we saw lower GDP in the US is because government spending went down. They can just spend, right? To Robert Infra's point is like they could just print and spend. Like they could just print 5 trillion, devalue the crap out of the dollar, and do all kinds of things with the debt, right? But
Yeah.
there's no easy solution because those have network effects around the globe that results in hyperinflation and many other problems, right? There's a lot of things they can do, but what you can see that they are doing is they are trying and have been trying for many, many years now, whether it was the Great Reset out of the WEF, or whether it's what this current administration in the United States is doing and what China is doing. Um, you can see that they're trying to wiggle their way out. And what you're seeing bubble up now is that at the core of every economy is energy. Energy is the driver. If you do not have energy, or you're at the behest of someone else who controls how you get your energy, you have no economy at the end of the day. And that's what I think we're seeing shape up right now. And I think it's going to take it's going to take way more time for us to see where this lands, because it's a moving target as we speak,
Yeah,
right?
exactly. Yeah. I like talking about this stuff usually when we're in the opposite direction of that path, because it's better to think about it in the place that we're in now than, let's say, a downside comes in the middle of the downside. So I don't know, I like asking this stuff prior to, if if we do see a downside in terms of, let's say, any risk on, and you see credits just coming in, defaulting, all that. So I don't know, I like talking about this stuff usually now.
You know, the banking system, swooping in and saving things through the congressional side, because obviously they're the ones at the end of the day that are printing the money to service whatever Congress would be doing here in the United States, in terms of swooping in and saving any larger institutions, or any or backstopping any capital. What you can see is the tinderbox has already been lit for a long time. When you look at credit, whether, if you look at corporate credit, whether you look at consumer credit, it's like just wild. Um,
I know.
you've got all these people that need to be paid, in the longest chain. And if you're at the end of the line, you're at some point, you've already accepted that you're screwed. So you have to take the hedge, which requires more borrowing, right? So it's just this self-perpetuating rehypothecation that will boom and bust. It's just a matter of, does it take down the entirety of the system? No. In fact, it actually favors speculators, right? To the upside and downside, right? And that's where you get the, buy the blood, and you know sell the rip and all that good stuff, right? So I don't
The
know.
auto industry has actually been a pretty good example of like the mess that we're currently in. There's a couple
Yeah.
channels that I follow of these dudes that just kind of walk around different dealer lots, and they kind of give updates on inventory and stuff like that. And I don't have a lot of experience there. I think Crypto Crank actually would be a really great person to get an update from, because I think he has a background in auto finance, on the finance side. But dude, I'm watching some of these videos, and there's like brand new inventory that's been on lot for 300, 400, days, some of it nearing
Yep.
like 500 days. It's like, and people aren't buying it because it's you basically are walking down to Chevy, Ford, Dodge dealerships, and they have $100,000 vehicles, and it's not Dodge Vipers and Corvettes. It's Suburbans and Tahoes
Yeah.
and Durangos. You know what I mean? It's it's absolutely crazy. Tacomas. So you've got all this inventory that's sitting there. It's optioned like all the way as much as possible. A lot of the stickers have ridiculous stuff where they're charging, you know, $1,500 to $2,000 for a tint job. So you can go get a vehicle tinted for $500-600, you know, at a very good place, and you can go get it for like two to 300 at a one of those kind of like little hole in the wall type places. You know what I mean? But it's like everything's marked up. They're not selling them. And then if we move into an environment where people can't get financing for these things, and like what's going to happen there, dude? Like that auto industry stuff, like I watch that and it gives me some real like I Am Legend vibes where I'm just like all the new cars just going to waste everywhere, and it's just like a wasteland of just brand new what are they going to do with all this, man? It's crazy.
Well,
My
they have to
family
have
is in
fire sale.
my
Yeah.
family's in the auto business. Like that was like my first job, and they still have their company where they buy and resell cars. And my cousin always tells me, he's like, this has to burst at some point in time. This is like
Right.
what they are seeing on cars, including
Yeah.
luxury cars. Let's say if you're talking about Ferrari,
Yep.
Porsches, it's like he keeps telling me, he's like, there's no way this lasts. And I started doing more research on it and looking at like what's causing everything to pump. And when I'm looking at anything that has to do with uh anything that's like, let's say, a collectible, real estate, cars,
Yeah.
anything that just avoids you putting your money away into something else, they
Yep.
have been surging drastically since
Even
2021.
just
Drastically.
standard used cars, Steve, even just like regular
Yeah,
used
100%.
cars, the prices are going up. Why? Because there's an increased demand for used vehicles because people can't buy the new ones.
Yeah,
So
exactly.
it's getting crazy, man. It's
Yeah.
getting absolutely crazy. I guess
Also
we're
last yeah, go.
no, I was just gonna say, I guess we're just in an environment where it's like you kind of said it when you said you really just want to put you want to put your cash in anything. And again, not giving financial advice, guys, here. We're just giving our personal takes and our thoughts.
Yeah.
But like you almost want to just park your money in anything that has any kind of supply cap, like and you're probably doing okay. What's up, Darren? We got Darren does things in the house. Because you're seeing it with dude, like here's the crazy thing. Like I like to look at like cameras, like for photography cameras, videography cameras and
Yeah.
stuff. And I kind of keep up with tech news around that. But digicams over the last couple of years, those digicams from like the early to mid 2000s, dude, they're on the rise. People are looking for them, and they're harder to find. Just like with cars, older cars are harder to find in good condition. And man, they've some of them have gone two, 3 times the cost of what they were new. We're just in a crazy market right now. Like the environment it's just unreal. And like it seems like it doesn't matter if you're a Pokemon collector, or if you collect sneakers, or you collect tech, or you should see that some of your collectibles are, for the most part, they should be up.
Yeah.
Yeah. What's interesting is you brought up the used car market. We've been through this before with the used car market in a not so kind rate environment where they implemented the cash for clunkers initiative
Ah, yeah, yeah,
where
yeah, yeah.
they essentially destroyed a ton of used vehicles in order to push demand to newer vehicles. So, I
Yeah.
mean, how can you do that without destroying demand for used vehicles? Well, you let these new car dealerships sit on their inventory, and as soon as the rate environment improves, they have to compete and they have to
Mm,
move. So a lot of people would go, "Oh, well, if rates came down, they'll just maintain the same price." It actually doesn't really work that way in reality. What ends up happening is rates move down. They've got tons of back inventory. They need to receive new inventory because the main automakers need to keep producing. So even if they lower the numbers that they're going to have deliverable to dealerships, you end up in an environment where we have to move these new vehicles immediately we're in a better rate environment. Fire sale, fire sale, fire sale, because they're all next to each other, right? The car dealers congregate around each other, and it becomes a race to the bottom until you find the floor and they've moved enough inventory. Because even right now, you can go and you can get good deals if you're going in cash, because the dealer will be able to capture more margin. You can get a lot of stuff done, but even now the prices remain stuck, in large part. They don't want to move much because the current investment on their lot.
Yep, correct.
And it's going to be, and this is where the wash pick kind of comes into play, is like, does he come in and immediately slash rates? I don't know, that's going to be difficult. It's we've never had a Fed head remain on the board before, and Powell's going to remain on the board. I think it's going to be difficult for him to implement the plan that he wants to implement in terms of cutting rates and decreasing the balance sheet, but that's purely speculation. But if he is able to lower rates, and we see that some of these medium term rates dive by a point, uh or by 100 points, basis points, then we could potentially see the new car auto market get revived in that sense. But you're going to get a short term bump because they're all just going to be essentially trying to liquidate old stock to receive new stock. And then once the market starts to normalize, they've gotten rid of that old stock, they're getting the new stock in, they're going to go back to their normalized pricing structures that they previously had for their old stock before the big liquidations. Um, it's gonna be wild. Like a lot of people in the cash for clunkers days, if you were around for that, this was actually it was really bad, right? Because a lot of good cars were taken off the road permanently and destroyed. Um, but what the effect was is we ended up seeing, because inventories were stagnant and they needed to bring in the new shipments. The rate environment got a little bit better at the time, and immediately they went to full liquidation mode on new stock, or on the stock that was sitting on the lots to get the new stock in, and then prices normalized right back to the upside.
Mm. Dude, imagine being on the side that has the data of like if they ran a cash for clunkers again, of the make and models that are most being traded in. Dude, you could probably play something on that side with getting a ballpark of like remaining supply based on figures of production of those models, and there might be some opportunities there. Is
Oh
all I'm
yeah.
trying to say.
Yep.
You're like, ooh, there's not going to be many of these around later on. I should probably see if there's any we can scoop the floor on, as they say on the NFT marketplaces. Let's
Oh
go sweep
man.
that floor. Oh man. Fellas, this has been a crazy convo today. Do you guys have any like wrap up takes? Let's get like a Bitcoin or crypto wrap up take here, and then we'll wrap the
Yeah.
show. Luckily today we were kind of able to take our time. Cade's and team are out at conference, and I don't think there's a show for another like hour and a half or something. So we're not really sweating time, but yeah, let's wrap it up, because I'm running out of coffee, and there's only so much I could take.
For sure. For sure, brother.
Steve, I'm gonna throw it to you one more time, dude. I don't know if you want to pull up your chart one last time, but I mean, has anything ooh, why isn't it throwing your chart up? Hold on here. Add to stage. Nope. Not letting me. Hold on here, Steve. Do you want to unshare your chart and then reshare it real quick?
Yeah, that's fine.
It's like stuck.
Let me see. Good.
It's trying, but it's not working. Why is it not pulling it up?
Yeah, I see. I don't know. It's weird.
Add to stage, and it won't do it.
I guess I could say a take anyways.
Just give a take. Yeah, just give a
yeah.
verbal take. Yeah, just give a verbal.
Well, let's like funny you mentioned 2021 NFTs.
Oh, it's every time you
fun
switch,
fact.
I can't hear you guys. All right.
Did you hear it, Andy? Okay.
Oh, he's gonna come back. All right.
I was just gonna say, fun fact, since we talked about NFTs, and because again, while I was bringing up credit and people going into risky stuff just because of where the market is, I'll just wrap it up with why I remain bearish and what we are seeing right now in the markets, including all these longs like we were talking about, building up with higher lows, and shorts getting swept. Right now, just to end it with a fun fact, we just hit a record in May. And the last time we had this record was 2021 in the meme stock frenzy NFT bubble. And that
Okay.
record is risky assets just beat inflows to safe assets by a record of 220 billion over the last month, which means there are more people putting money into riskier assets than safe assets in the last month. And the last time we have seen this much inflows compared to safe assets was the 2021 meme stock frenzy. So I guess I'll end it off with a thing like that.
Man, good thing I'm taking profits on the way up, huh?
Oh man. Steve, how can you be this is like CT, right? How can you be bearish? Prices are going up. Don't you see that it's green?
Yeah. It's green,
Oh,
right?
yeah.
Bitcoin's making new highs, but if you look at
Yeah.
alts while they're still at the lows trying to make their moves up, I have a hard time believing that everyone's going to be buying alts at the lows and getting 10x, 20x gains when they're getting their Bitcoin signal at 80K instead of 60K. Like
Yeah.
last cycle, alts bought him before many alts bought him before Bitcoin did. So
Maybe it did,
we
maybe
did,
they did this time as well. We'll find out.
yeah,
Mm,
yeah,
yeah,
He's like,
mm,
yeah. I don't think so.
yeah.
That sound right there. If I could, I need to clip that and have it on a album.
Yeah.
Oh,
I mean, I also have been tracking that, Steve, and really that means that for those kinds of assets or indices or equities, it's profit taking time for all the insiders and all of the board
yeah,
members and everybody else, right? That's and then and then you'll see the rotation right back to risk off or less risky
Yeah,
assets. Um, Now it's a matter of like, if you want to compare this to Bitcoin, where does Bitcoin land when that happens? If it's still in an uptrend. And right now, my take on, I'll just give you my quick take on Bitcoin. I know that kind of explained a little bit earlier, and you guys did a fantastic job, as always, of illustrating what it is that you're looking for and at. For me personally, we've hit one of the primary targets that I wanted to see hit at the monthly at 82 and a half to 83. We just swept it. So now it's about maintaining structure and continuing to close above the 78 to 80 level for me personally, if we're looking for a further extension of this rally in the current trend specifically to the mid to low 80s, right? So we've already seen the low 80s get hit. So then it would be, your 85 to 86 around the weekly and potentially more to all the way up to, 89, 90 at that weekly lower high. And that would be a direct retest of the area that was the primary support on weekly closes between 86 and 89. We saw closes kind of coming in just above 86 there before the big breakdown to 60K. So I would still consider the possibility of a retest higher as long as structure maintains. We don't see a trend break to the downside below 75. Great. But if we see any kind of higher low locally that gets taken out, likely gonna put the brakes on testing further up. We've hit the majority of the retests that I was looking for so far. So now it's watch and wait.
yeah. Now the fun begins. Yeah, we
Oh
spent
yeah.
a little bit of time, Landy. I think you weren't on yet, or you were trying to connect. Where I said, I feel like there's four groups of bulls at the moment, like the perma bulls that have just been bullish the entire time. They were bullish at 16K. They were bullish at 70K. They were bullish at 50K. Bullish at 126K, and then bullish again at 60 and everything else. Right? They're always bullish. Then you have um, the bulls that are bullish off of the lows. So they, they traded, they bought in at 60K, whether they were using just some dry powder or they took profit
Yep.
at the high and then bought back in, but they bought the lows and they're bullish and they're in profit and they're happy right now. They're bullish, they're hoping the low is in, they're rooting for higher, and like good for them. I can get on that side. I can respect that. Then you've got late bulls, which they're flipping bullish right now. They've been flipping bullish this week, maybe even partially last week, but they're flipping bullish. They're the late bulls. They were bearish, likely bearish at the lows. They were likely bearish at the lows. Likely we're trying to get significantly lower prices in this range that we've been in. Right, they were looking for the 50Ks, 40Ks, and they're now flipping bullish because either they're feeling the FOMO or they got pretty beat up. They got beat up trying to short it lower, and they're now like just capitulating and saying, "Screw it, I'm going to join the green side, and I'm going to go max long here with everything I have left."
Dude, better, man, they're just gonna get beat up again. Ouch.
Though, yeah, this is the worst group to be in. By the way, if you guys can't pick up on that, this is the worst group. This is a group you don't want to be a part of because they get wrecked to the upside and the downside. And then the fourth group, I would say, is just the like 4-year cycle traders that they were mostly out at 120 plus, even 100K plus, mostly taking profits above 100K, and started like a DCA strategy, on a move, on a 50% pullback or something, starting some kind of DCA strategy. So, but I can't really
Yep.
think of any other groups. But I guess I shared that with like caution that you don't really want to be group 3. Even if this
No.
thing is a deviation, even if it is something different and we're going significantly higher, group 3 has the highest risk profile by far. They
Oh yeah.
tend to get trapped off sides the most by far. And they're the late participants. They're usually in the excess phase of the market, not in the early participation phase. They're in the excess. And you just have to be careful. You have to be careful. So look, this show's not a show that gives financial advice. We're not here to make recommendations on what you should buy or sell. But we can just share our experiences. And I can tell you, and I'm sure these guys will tell you, that it's just been my experience that being part of group 3, where you're late to the trend, you're late to a move higher or a move lower, you're jumping in because of fear, FOMO, or whatever other sentiment based factor, and you've been beat up and you feel like you have no other choice but to take the opposite trade. That's very, very rarely been the right move for me. I don't know about these guys. They probably would agree with that. So just a little bit of caution
Yep.
there, Guys. As Landy said, we're coming up into a key area. Yes, this thing can go higher. Yes, there's possibilities that something is different, but we're at that point where the risk is exponentially higher here versus either having already taken that bet at significantly lower, like group 2 that got low bullish off the lows, or being on that other group, which is just going to basically wait for a confirmation that something is different and then participate on that confirmed trend change, market structure shift, whatever that is. And sure, you miss a little bit of the move, but you get clarity. So
Yeah.
um,
And as you were explaining
yeah,
your kind of cohorts or groups there, I would, I safely place myself in groups 2 and 4, right?
yeah.
Um, and this is where, even if this was, and I've said this a few times, even if this turned out to be the most bullish of outcomes, the time to position isn't off of a run up. It's off of the, evaluate the next correction down, right? Like,
Mm,
and give it time to play out, because that's what's really, I think, going to define or lower the risk for those folks. Because if you haven't went into this with a plan already, at least once it hits a high and begins to correct, you can start to formulate your ideas of how you would like to plan, right? If you're a trader, you already are well aware of, or I hope you would be well aware of, the areas that you would be interested in trading back to the upside off of any correction, or trading the downside correction itself. But if you're an investor and you're here for the longer term, you know how how emotional are you when price goes down? Because that's really going to be the key factor. So you better have a plan. Even if it was the most bullish outcome, it doesn't go up in a straight line. And even when it does go up in a straight line, it comes right back down just as fast.
Ash is just jumping on, and I love what Ash said yesterday, I believe. He was kind of referencing some of the macro discussion that was had, and yeah, what did he say here? He said, one thing you'll notice is the macro guys talk about drawdowns and percentages. What they have never learned is market structure, which has been demonstrated over a number of cycles. They miss the subtleness of a chart. We always talk about how price moves and reacts. The number is almost always the last thing that we really worry about. So, yeah, I think that's a pretty good take, man. I think if you're an investor, um, I think there's some value in maybe listening into some of these conversations, and even if even if you're in group one where you're just always bullish, you believe in what Bitcoin is doing over the long term, you have a plan, you're a buyer at every level, you're DCAing all the time. I still think there's value in understanding the ebb and the flow of the market, and really understanding as Ash said, like the subtleness of the chart, and like the details, and there's a lot of value to be had there, even if it doesn't, really cause you to make a big change to your strategy. I think there's definitely some opportunities there to at least take better advantage of those kind of one-off deviations, and those moments where there's maybe just a little bit extra juice in that squeeze, if you will. So yeah, it's an interesting thing. Darren says trend and market structure before indicators, and timing always. Yeah.
Yep.
Man. Guys, this has been fun, dude. We have to do more of these like group stuff. Like if we had Calvin in here, it would have been fun as well. Even Lady Trader, and just the rest of the folks that jump in on these streams anyways. Always make for a great discussion. I can tell you guys, I'd much rather have someone to, kind of shoot the shit with, and have some conversation with, as opposed to just talking to the camera by myself. Thankfully, we do have a pretty great community of people that jump on these things. So shout out to everyone that jumped on here, all the listeners, all the viewers, you guys that are in the comment section, chatting with us, leaving comments, leaving laughs. You make these things a different experience versus just sitting there talking to the camera by yourself, with zero feedback. It is very different. Anyone who streams or creates content knows exactly what I'm talking about. So
Yeah.
A lot of appreciation to you guys.
Yeah.
Shout out to Public, the sponsor of the show, for making this show a possibility, giving us the opportunity to do this, almost every single day of the week. Now we're doing this 4 days a week. We're trying to scale up to 5. So yeah, huge shout out, guys. If you haven't checked out Public, go to public.com/wolf. Check out some of the AI features and options that they currently have right now when it comes to building an agentic portfolio. Is really what it is. It's like a hybrid agentic portfolio. So pretty cool stuff. And they are offering a 1% uncapped match on any transfers from any other brokerage. So go check them out, public.com/wolf. And lastly, but not least, huge shout out to Wolf Bitcoin, Kate and crew, and the entire Wolf Financial team for just giving us this opportunity to jump on these streams, on the Market Talk spaces, on just all the different platforms that they've put together, and for bringing all of us and everyone else together and building this amazing community. But again, Steve, Landy, gents, this was a great one. Appreciate you guys.
Yeah. Pleasure. Thank you for having me.
Yeah. Same.
Yeah. We'll do it again, guys. With that, we're out. I gotta go use the throne room, fill up the coffee, get some fresh air, all the good stuff that you got to do after a long stream. So with that, we'll see you guys. Have a great rest of your day, and we'll see you on the next one. We'll be back tomorrow with more streams and shows. Peace.